Happy Sunday, guys. Another Sunday scan coming at you. Thank you guys for always tuning in. Thank you guys for the comments. As you guys know, I always love the feedback. I love to get the key takeaways that you guys take from these videos because it helps me learn what you guys don't know, what you guys need, and it allows me to make more videos like I did last week. You've seen that we're starting to kind of pick up a little momentum with the YouTube channel. You guys are giving great positive feedback, and with that said, in return, I'm trying to pump out as many good videos as I can. So tonight, if you want to leave a comment of your biggest takeaway and one thing that you'd like to see a video about, that would be great. And I'll take everyone into consideration, start to kind of figure out where people would get the most benefit from, and then that's kind of where I'll gear my videos in the future towards. But hopefully you checked out earlier in the week, we had a couple videos that we put out and got some great feedback. So once again, thank you guys for watching them. First things first, I wanted to give a shout out to JC at All-Star Charts. He reached out to Traders for a Cause, and within a week, he put together a nice panel and did a full day, 8 a.m. to 6 p.m. chart summit yesterday, and raised nearly $50,000. So I thought that was very commendable and inspiring. So just like trading, you know, it's supposed to be inspiring, not influence you when you see big P&Ls and stuff, but inspire you. You know, what can you do? How can you better yourself? So with that said, he got my thoughts rolling, and I'm gonna try. I think we're gonna pull it off, but we've got something pretty big planned. So I want you guys to go to tradersforacause.org. That's the number 4. Traders, the number 4, acause.org/COVID-19, and we'll have a little email sign up there, and we're gonna keep everybody updated. But we are going to try to put something together real quick here and join this movement in kind of supporting this horrible pandemic. So, like I've been saying, you know, it's a trader's market. It's a lot of good stuff going on right now. Again, if you're not making money, that's okay. Relax. You know, everything comes in time. But for those that are, and you know, you're looking for somewhere to help. There was a great quote by one of the speakers that they had yesterday. You know, we're in a time that we feel pretty helpless, right? Because, you know, what can we do about it? But just that little bit of help at least makes you feel like you were part of it. You did your thing. You did what you could. And so again, traders, the number 4, acause.org/COVID-19. And we'll just collect a bunch of emails. We don't spam, don't worry. It's a 501c3 nonprofit charity. And we will keep you guys updated. It should be a big event. I'll do another video as we start to kind of plan this thing out. But got the wheels rolling, and let's see what we come up with in the next short while here. So with that said, Friday was another day of intense, amazing range. You know, you couldn't ask for better. We had a nice steady grind into the last hour, and then all of a sudden it just came apart. And I didn't trust the move. I wrote that. And, you know, it's not about making calls or being right or being wrong. It's just about catching that meat of the move. You know, you don't need to be top and bottom in this market. You don't need to. There is so much range right now that you just need to be part of it. And so that's what the goal is going to continue to be moving forward. As I said last week, you know, scans is good to kind of stay familiar with the trades that interest you. But right now, it's super, super important to just, you know, kind of have your eyes on the market, eyes on a whole bunch of charts. Just go through those scans, scan and scan and scan and scan. And, you know, you might go through 300 charts, but you don't realize it, but your mind's going to start to remember these things. And then when they start to fire up and come on your scanner, you react that much quicker. So that's going to be the goal, as always. You know, get a full understanding of what's moving, what's not. Just like FAZ. FAZ I put on watch last week when the financials were just completely unwinding without a bottom. And as soon as Bank of America rebounded, what did you see FAZ do? FAZ. Completely unwound, just like we saw on DWT, TVIX, and all the other triple leveraged ETFs. You know, when things turn for the first time, just the entire premium just completely comes out of the names, and it's just an incredible unwind. So it's about understanding where things are at. For example, in that case, the financials. You know, it's not that I was planning to trade Bank of America every single day, but in my mind, I remembered, hey, you know, everything is being beaten down right now. We've got Bank of America, Morgan Stanley, you know, all these different banks are all at the lows. As soon as that bounces, number one, the rebound is probably going to be larger than we think. And number two, that triple leverage ETF is going to completely unwind. And that's exactly what happened. And that was all from prep. So, and again, you know, my current market thoughts overall, I'm not trying to call a long-term type thesis, but it still remains the same. I don't think there's a rush to really buy. You know, everybody gets excited and thinks, okay, it's finally over, and you rebounded last week and whatnot. But I just don't see this being a short-term thing. I think that even if it rebounds in the coming week, I think that we're still 6 to 12 months out from even being close to maybe being 25% fixed. And so what I mean by that is I think it's going to get worse before it gets better. I think that all these multiples that we're used to, it's going to be a search for value and things like that. It's not going to be a situation that, you know, all right, we got a vaccine, all right, it's all fixed, it's all good. Yeah, we're going to rally, but I think it's going to be a process that takes time. Time is going to be the key word. And, you know, I think that if you're eager to buy bounces, I just don't think that there's a rush to be there. Yes, there was some incredible bounces last week, and yes, I definitely minimized what could have been done, but that's okay. You know, you're gonna kill it, you're gonna miss, and you're gonna have some losses. It's all about keeping those losses to the minimum you can right now, and really focus on what's working. So, you know, last week I talked about, you know, if you're losing right now, then it's a problem, and you need to reevaluate the trades and whatnot. And it's not, yes, I'm having losses every single day, but it's about minimizing them, right? The point was that if you're continually losing day in and day out right now, something is wrong. It's not about whether or not you're not making money. If you're not making money, that's great, because that means you're not losing, right? And it's a trader's market, and maybe you are not familiar with, you know, trading these momentum crazed waters, right? So it's better for you to take a step back. But I'd rather see somebody step back and not be trading than losing continuously in this market, because that means that, you know, you're not familiar with this, and you need to kind of tiptoe in, right? We're not going to do a cannonball into the market and, you know, think that we're gonna be all, you know, perfect. You got to tiptoe in, right? So I think that is the most important thing right now. You know, there's no reason. Yes, there's trades that you can be aggressive on if you know what you're doing, if you're familiar, but there's no reason to be slugging size on the front side of moves when, you know, you've got a huge move up, and then when it turns, it's just a nice steady grind down. There's no rush to be in at the top. You're still going to get this huge unwind without all the risk of trying to find the top, right? So for me, improvements from last week that I need to do is, you know, Bank of America, I was pretty biased on the trade, and, you know, I did get it. I got the call trade right on Friday. I got short pre-market and unwound. I figured it was going to gap down $10 and unwind to, you know, maybe $30 down on the day. And that's exactly what it did. But I had the thesis kind of played out or in my mind Wednesday and Thursday, and, you know, I got on the right side of the trade, and I was kind of ignoring what it was suggesting. It was holding. So why am I still staying in there? So I ended up wasting a lot of time, a lot of buying power, a lot of precious, you know, headspace that I could have been trading other names, right? It's not about necessarily losing big on it. I didn't lose big on it. It was just more of, it was hanging on. Why am I trying to find the top? Why am I staying in this name when it's not paying? So that's always going to be what I'm working on to improve. But other than that, I mean, there was incredible momentum again. both to the upside and the downside. We had PENN, PENN, which had a huge A+ setup parabolic move and then just absolutely slammed down $3 real quick. So that was great. And other than that, we had a bunch of new members last week, and that it's awesome. I mean, it's a great traders market, like I said, but I just want to reiterate and remind the new trader and everybody that just like I said before, it's okay to tiptoe in, right? This is a great time that you're going to find a lot of new people coming into the market because everybody, the 3.5 million the job report, or not the job report, the unemployment on Friday. There's tons of people looking to supplement their income. There's tons of people trying to figure out how they're going to pay rent next month, and that's good. I'm glad people are trying and looking at the market, but it's a reminder that if you come with the thought process that you're just going to come to the market and pay rent every month, then the problem comes. You start to go backwards, and when you go backwards, then you got to flex and try to make it back, and that's when all the problems start, right? So make sure you're tiptoeing, especially if this is new to you. Because it's very easy to do the wrong thing and then start to accelerate the wrong thing. And it's never fun. You always feel like you're trying to make back. And like I was explaining to a couple people that I was talking to that PM me this week, a lot of members are sending me crazy P&Ls. They're having this breakout year, breakout month, and that's fantastic. But you always need to remember that make sure you recenter, put the brakes on, and don't go right back to, well, I made this on Friday, so I'm going to go for it again on Monday, right? We make the best trades when we just trade. When we come and we try to make X, that's when we start to go backwards, right? And if you think about those of you guys that went to Traders for a Cause in Vegas, I was talking about these different A+ setups, right? And when you reverse engineer the year, the key is to stay alive those 20 trading days or so, per month. But make sure that you're able to attack on those 3 or 4 A+ opportunities, right? So the reason why I call this a fantastic market to stack, or a fantastic traders market to stack capital and really build your account is because we're literally having 3 to 4 A+ opportunities a day right now, right? So if you think about on a normal trading year, there's 3 or 4 A+ opportunities a month. Whereas right now, it might be 3 or 4 a day. Or maybe even less than that. Let's just call it 3 or 4 a week, right? 1 per day, a little bit less than 1 per day. So being able to capitalize on that trade is what it's all about. You do not need to try to capitalize on every single trade. That's when you start to get emotional with things. That's where you start to get oversized. And that's where you start to run into issues. So keep that in mind. And if you are that new trader that is trying to pay rent next month, do not use money that you can't lose. Do not chase those gains, or those losses rather. Do not chase them, because if you do, I'm telling you, you're going to just go backwards. Okay? And if you do have beginners, not necessarily luck, but if you do have beginner success right out of the gate, make sure you recognize that. Make sure you're doing something that you recognize that it's more than just a number in your account, right? It's easy to just see numbers go up and down in our brokerages account, but when you pull it out, you wire it home, then it actually is tangible. You can see, you can put it towards something, you can buy things, and I think a lot of us forget to do that. So just my thoughts. Let's see what else I had. Going small makes good money too. I talked about that on Bank of America. A lot of people, or not Bank of America, Boeing. I think a lot of people are, shy away from the price of it. But really, it's about the 10%, the 15% move. Is it a proper edge, good setup type opportunity where, maybe you only can do 10 shares or 50 shares, but if you make 20 a share, it's a huge trade. So just keep that in mind. Also, using less size, looking at the bigger picture move is going to keep emotions out for you. So that's going to be a big key, I think. Let's see. Same thing with member feedback. A lot of people sending P&Ls and whatnot. Just make sure that you stay grounded, right? You're only as good as your last trade. Just like I said on the on my best day of 2020, act like you've been there before. Recenter, refocus, come back the next day as if it never even happened, and you're going to be trading in the proper mindset. If you don't, you're not going to have the right mindset. You're going to make mistakes. One other big thing too that maybe not a lot of people or people should talk about more is right now when we're in isolation and quarantining and whatnot. It's gonna be tough for some people. You don't realize how social your life was until you can't go anywhere, right? So make sure that you still follow a process. Set that alarm, get up, get on a treadmill, do squats, air squats, whatever you want to do, but get your heart rate up, get some type of consistency in your day. Set that alarm, take a shower, and get going. Otherwise, if you just kind of roll out of bed and you're doing the whole boxers to chair thing and trying to trade, you're gonna trade that way. You're gonna be just as sloppy, right? So make sure that you continue with a process. It's very important. Working from home for some people is extremely new. So the easy way to fix that is to create consistency in your day. And as I've always said, the more consistency you have, the more it goes into your trading. So let's see. Scan is next. But like I said, if you missed the beginning of this, last week I said that I was kind of generating ideas for how to kind of think out of the box and help those in need. So I've already generated some ideas. I'll share some of that in the coming week, but like I said, we have a major idea. I am thinking April 11th. We will email out midweek, Traders for a Cause, the number 4, tradersforacause.org/COVID-19. Make sure you're on the list, and we'll send you everything you need to know. So, let's get right into scan. By the way, got a new shirt. For those of you guys that spell lose, loose, this is not right. Okay? So there's a lot of comments and a lot of emails, a lot of folks on Twitter that I always chuckle a little bit, but you cannot lose money. So got this beautiful shirt to remind everybody. CLVS. That's going to be the first one on watch for Monday. Great volume, about 20 million shares traded, and about midday, right around this level, right around 687, they started to put, I feel like an algorithm came in. They started to put both bid and offers. They boxed it with 40, 50K bids layered on both sides. You started to see the volume picking up. And, I hadn't actually seen that since this move right over here. So I am not saying that they're going to do this move. But what I am saying is relax about, trying to find the top. Because when they do this, they have a plan. And whether or not their plan was just to create volume on Friday and that was it and they're going to walk, fine. But we're going to learn a lot off the open. And if it fails to follow through, I'll be looking for the fade. But I am cautiously staying familiar and aware that they could rip it a lot higher. So I want to be there. I want to be interested in it. I think it's going to be a great trade. But based on what we saw in the tape, based on what the price action said, they may have a plan, and I just don't want to step in front of a train. So with that said, if it flushes out, that doesn't mean it's a short. If it pops in the morning and it doesn't break down, I want to be more cautious than I typically would until we fail at VWAP or failed follow through momentum, until we have some type of confirmation that, hey, it's not happening. So definitely going to be watching that one. I do think we have a decent trade, almost like SDC, where had that big day and then it comes right back down. I would love to see a day where it just rips through 750, 770s, maybe even higher, and then slams back and not necessarily red, but closes weak or flat. So that was CLVS. MRNA, nice steady move, breakout towards the end of the day. This is one of those that I'm just going to have price alerts on. So basically, I don't really want to fight this name unless there's I don't want to fight it at all, but I don't really want to trade it unless there's some type of parabolic move. So in that case, it would be a situation like this and maybe another 50 cents or a buck, right? So I'd love to see 31, 32 quickly and then sit back and then look to scale in for the fade. However, if it's just a slow, steady grind like it was Friday, I want to stay away from that. And you can see I did a video midweek on VWAP. It's not a secret tool. It's just a tool to help you understand what side of the trade you're on, right? If you're in a channel and it's and it's over VWAP and it's channeling, just like this one here, you can see it's kind of channeling between 29 and 29.30s. We might get bearish towards the 29 level. It looks like it's going to crack, but the entire time it was over VWAP. So we want to be cautious of that. And the same thing, I use that tool on BA, Boeing, and it was helpful as well being on the backside of VWAP, which is why I was interested in that short on Friday as well. But other than that, MRNA, higher the better, parabolic move, or gap down, fails. And basically, I would probably use Friday's VWAP as sort of the guide where I'm looking for it to break trend. If it holds over this level, I would need to see a parabolic move. Tops. Tops is trash, as you guys know. You can't deny it. Whether it goes to a dollar like all of StockTwits and Robinhood wants it to go, we'll find out. But great volume, no doubt. Nearly over 350 million shares. So that was huge. CODY and another sniper in the room posted it nice and early. Had abnormal volume. That right away triggers an action in my head. Like, hey, this has got way abnormal volume. This could be the day. So I started picking away at it, 11s, 11.7, 12, 12.3, 12.5. Started to scale into the winner, and as you can see, it never busted VWAP throughout the day. So once again, going back to the video we did this week, very timely video to understand this concept. So for the most part, I did hold the majority of the size until I think 18s, 25, and 26. And then at which point I went short into the parabolic, into the 30s, and I posted all those charts for you guys to see on Friday. So my goal was short it down to the teens. We got the teens right before into 3 p.m. and covered there, and made a couple other trades. But other than that, pretty much was done with it. So in a perfect world, higher the better, parabolic move, looking for backside. Otherwise, weak open, ramp, red to green. The only way that I would long it is a weak open, starts to set up for a nice red to green move. I probably wouldn't long it if it gapped up. I would assume that it's going to want to retest and maybe ramp right into Friday's highs and go from there. I think it's very key to make sure that you are well aware of its history. I'm not saying that it can't move. It very well can. It's going to be a popular name, nearly 400 million shares. So there's liquidity there. But once it does fade, it's going to fade, and I will look to fade it as well. So I don't think you need to be the first one in to capture the downside, because when it does crack, it's going to go back to a dime relatively quickly. So just keep that in mind. Again, you don't need to be first in. BA, you guys saw the idea, thought process call on Thursday. My thought was $10 gap down and then maybe be down $20 to $30 on the day. We had that huge flush out, nice failed follow through momentum. You can see, the basketball analogy that we talk about on Tandem Trader, and it started to get relatively weak versus the market, and then it came back, and then obviously the market just took a dump at the close. So continue to sneak down after hours. Long term, I think this thing is screwed, but that doesn't mean you step in front of it. I just think that each and every big move up will become a liquidity event for real long-term longs. I think that they're going to be screwed for a long time. Just like I was talking about, the market in general is going to take a long time to recover. I just don't think that people really understand why they're investing in Boeing right now, except that they think it's cheap versus where it was $300-400 per share. But the reality is people are going to be walking away from the purchase agreements. They'd probably rather get sued. It'll be cheaper. In addition, fuel cost is so low right now that there's no incentive for them to buy these fuel-efficient aircrafts, right? That was the whole selling point in the first place. So when you throw those things out the window, why are they buying Boeing? So anyway, I put a couple on Scan when you go to it. And by the way, if you're watching this on YouTube, if you go to the description, there's a link and you can see I write out my thoughts as well. I posted a couple of other tickers that I'm not going to go over on charts, but just ones that I like to see. So like I said the prior weeks, it's all about charts. You just want to see the chart once or twice. And then that way, if it comes up on your scanner during the day, you're going to be prepared. But Play had some relative weakness. I'm looking for maybe a push up towards VWAP levels, 1550s. If we get a market gap, who knows if we do. I'm cautious that it's going to probably want to hang around 15. But if it doesn't and it stays heavy, I think we could get a nice flush out towards, maybe 12 or 13, which I'd love to be part of. But with that said, these are the types where I could see myself getting a little bit too biased and it snaps right back up towards the 15. So I think we're going to have a good opportunity, but I think it has to be a trade and not get, above and beyond where we should as far as, thinking that this has to pull back. At the end of the day, we went from 45 to 5. So 5 to 10 is, or 5 to 15 is, it's a big move, but it's still down, 70% from the highs or whatever that ends up being. So HTZ, higher the better. This one's had relative weakness over the last couple days, even with the market bouncing. Yes, it had a nice breakout the day before the market took off, but the day that the market was nuts, it actually closed red. So I take that into consideration, and to me, that's relative weakness. So, you got the CAR, you got HTZ. Those are, kind of the ones that I watch together. So if I see a huge trade setting up in HTZ, then I'd probably look for CAR to make something similar and spread it across. But at any rate, possibly back down under 6s towards the 5s. More of a trend join for me, 9:45, 10 a.m. plus. Let's see what happens. And we obviously need a weak market to continue with the fade idea. SDC had a nice breakout on Thursday. Caught some shorts off guard, ramped up. Then they had a COVID-19 PR. I think they were going to make some ventilators or something. I don't remember what it was, but or a mask. But you could see that there was a VWAP seller for the most part. It was kind of hanging around VWAP. So I'd be looking for it to kind of retest that level and then fade off, and ideally starts to fade back towards 5, something like that. Good volume. It's been beat, but at the end of the day, it's still a pretty heavy market cap. Uber is a great trader, and I'm looking to trade kind of like a market type theme. So if market continues to fade, I'd be leaning here. I'd be looking for relative weakness. I think that Uber's obviously going to be screwed for a long time. I don't think tourism and planes are just gonna click it on in a couple days. So although it did bounce large, and although it's hanging around, I think we probably go back towards sub 20 near term potentially. So again, I don't want to jump in front of it. I don't want to lean on it too hard without trend agreeing, but I just don't see, unless we bounce, a couple thousand points again, I just don't see how this would hold trend at the moment. And at the end of the day, it's not that far off the highs, though, surprisingly. So anyway, Groupon had a crazy move. I actually didn't see this after hours, so it ended up pulling back. I think they had a huge imbalance trade, and it was 36 million at the close. But likely the only reason for the big move there, I was shorting it a little bit, and I had moved on probably by like 3:30 or so. I traded this push, it came down, it started to grind, so I went ahead and moved on. But I'd be looking at this one versus basically the 130s, 120s, and I'm thinking, even if it gaps down, I think everybody will have it off radar, and then all of a sudden you'll see it kind of just fade back towards the 70s. So had it not pulled back after hours, my goal would probably be a 150 gap up parabolic and then pull back. But maybe something that you can get on the right side, put a stop in, and just not watch it while you're trading other things is my goal for that. SPCE, great idea midweek for that 17 shove and unwind. I'm thinking that all pushes will be sold. So I'd be looking left and looking for opportunity. So any good pushes towards 1580s, I'd probably be looking to use 16 as a guide and look to fade it. CRWD, it doesn't look like much, but this is one that I'm just going to set price alerts, right? So, it came down and then it had earnings right over here. I think people were just positioned wrong. I'm not sure that we see this keep up as well as it is right now. But we're coming into some daily VWAP resistance. I think this is one that just kind of has to exhaust people out, let it do its thing, and then as soon as you forget about it, it's going to crack. So I'm going to put some price alerts at 55, 56, 57. That way, when everybody gets bored of it and it finally starts to pull back, it's going to alert me in the room and say, hey, it just hit 57. Hey, it just hit 56. Hey, 55. And hopefully at some point I catch it on the downside. Last but not least, for a couple bigger picture ideas, and then we'll jump into the mortgage names. TLRY, higher the better. And I have some overnight. This is the second night in a row that I held it. I held it from Thursday. I bought more on the dip on Friday. I sold some into both ramps. But overall, I think this could be one of those types that goes 10 to 12. And if it doesn't hold out of the open, if it doesn't have either a weak open, 10, 20 cents and ramp up, or hold, then I think we'll learn pretty quick if it's going to just unwind, right? So I am unbiased in the sense of, what it's going to do off open. I have a position overnight still, but if it doesn't do what I think, I'll just be looking to get out, but I'm going to be looking to short it if it fails. So my thought is it could break out, go 10 to 12, especially on some cover and anything else that maybe comes out. Maybe fill some of these gaps looking left. I guess it did one. It's got one more to go. But we're going to find a lot out by, I would say, 9:30, 9:35 a.m. AYTU, I had this one as a swing, and then I bought it on, I think it was Tuesday or Wednesday. It just kind of faded off about a dime, 15 cents, so I kicked it off. And then it started to have a nice little breakout, so I just picked some in the 180s on Friday, and I held that one over. So I kind of had a feeling maybe at some point they'll put out another PR. That's what they do. And it's pretty reactive right now. The reason why it originally made me interested was the 100 million share day after they've raised twice now. I just think shorts are pretty well positioned, and if we get another PR, we can do 250 or above. So let's see what happens with that. Nothing I'm crazy excited about, but just thinking that we could have that next leg. And last but not least, I didn't put commentary on these, but LADR, MFA, you've seen how I've been trading MFA if you've been paying attention to Twitter or Instagram, GPMT, and BXMT. Those ones are just names that have great volume, great range, and it's in a sector with, I don't know, there's probably 100, 200, maybe 500 of them. But I'm just picking the highest volume mortgage type names that will probably trade in sync with one another. I'm looking for relative weakness. I'm looking to join the trend. MFA, as you saw the 2 days in a row, the goal was to fade the gap. You can look left here. You can see the resistance 260s. And I just faded that down. I did miss one major cover right over here. Unfortunately, I was prepared-ish. I was there, and then I pulled it, and then I was going to go for 157, 158, 159. I should have just swiped 160s. It came right back up. So that was a pretty annoying P&L swing, because at that point I was pretty much full size. And, it was 20 down, 20 back up, and I just fumbled it. So, either way, good opportunity, good stuff, and hopefully we continue to have some great trades here. I like to spread my risk on these because, some of these might be zero, some of these might be saved. So, the only ones that I would use a little bit more size is the ones that have high liquidity and a chart that suggests heaviness. So I've put a couple just to see the chart. Again, this market is about seeing charts. Chewy, ZM, TDOC, and work. These are your outliers in this market. These are, strong. COVID-19's been good for them. Chewy, everybody's ordering their pet food. Work is Slack, so everybody's buying that. Zoom is teleconferencing and whatnot, or web conferencing, and obviously TDOC, we hear telehealth and telemedicine every single day out of Trump's mouth. So that's been helping the bid get stronger and stronger and stronger. So again, I'm not doing chart overload. I'm not trying to trade all these things, but it's about seeing these charts, set your price alerts when you want to know, and that's how I'm tackling these. So again, my main watches is only a few on Monday, and that's going to be CLVS, MRNA, and potentially TOPS. I'd probably toss MFA on there, which is one of those mortgage names. But again, that's 3 to 4 main watches, and BA, Boeing. If we start to see my thesis kind of come forward. So with that said, I'm going to have a couple different watches in the morning, but it's all about seeing the charts. It's not about trying to trade them all. It's about getting a feel for where different sectors are at. It's about kind of just understanding what is moving the market and or what sectors are moving within the market. So, just like you saw food delivery plays, Blue Apron and WRTH or whatever it was. I think that you'll see different sectors heating up, and that's really been the play lately. You saw it with coronavirus names. You saw it with like mask plays, APT, AHPI, NBY, all these different things. Every time one goes, all the others go. So just keep that in mind. And when you see them start to move, start to look at all of them, see if there's any other edges that you can kind of form, and just be cautious. Remember, lock in around the core. Every move that I nail, I'm locking it, and then I'm re-adding if it stays heavy or stays trappy. It looks like it's going to break out, whatever. We're in a trader's market, so what that means is I could be dead right 1 minute, and 10 minutes later, or dead right, it flushes out, nailed it, and then 10 minutes later it's right back, right? So when I get on the right side of a trade and I nail something, if I've scaled in, I'm scaling down. And then if it starts to stay heavy at that level, I'm adding more. And if it flushes out, I'm covering some, and I keep going around that core. Keeps you honest, keeps you cautious in the event that it decides to go the other way. And then on my losses, I'm keeping them minimal because I am not scaling into a loser. I'm dabbling in. I'm starting in with a small starter just to get a small position on. If it starts to go my way and key levels start to confirm and break down, I'm scaling in. If it doesn't, I'm not. And that's really the key right now for getting the moves or getting the meat of the moves. So again, two things. One is last week we had a great sale, a lot of new members. So if Cam's email box is probably still overloaded. So if you have not received a reply yet, email him, cam@investorsunderground.com. He may have missed it if he hasn't got back to you yet. But email him. And then the second thing, like I said at the start of this, tradersforacause.org. Again, it's the number 4, traders, the number 4, acause.org/COVID-19. We're going to collect a bunch of emails, and we're going to send you out, something for what we have planned in the future here to help combat this situation that we're all facing right now. So, other than that, I obviously did not get prepared for, who got the free t-shirt, but I can do that right now. And let's see. Zarols 94. ZAROLS 94. Shoot me an email, webmaster@investorsunderground.com. We'll get a shirt sent out your way. And that's about it, guys. So thank you guys for reaching out again. As I said at the beginning, leave your biggest takeaway from Scan tonight, but also if you've got ideas for something you'd like to learn more about, feel free to write it. Some of the things that I don't find necessary for like a YouTube channel is, the tape reading. We do that kind of stuff, as far as what we see in the level 2 and whatnot in Traders Lounge, which is, we have the Momentum Room, and then we have the Traders Lounge. So we do that live. I think that's the best way to get screen time and see that kind of stuff. But other than that, the other most common questions we get, obviously, is what broker, Centerpoint, and E-Trade. So if that's going to be your question, you don't have to ask. But other than that, I mean, think brainstorm, come out of the box, and let's get some good content out there. And as always, I appreciate your feedback. Leave a thumbs up, and we will see you in the room tomorrow.